in a world increasingly driven by digital speculation. Food investing offers something rare, which is essential demand, tangible assets, strong pipeline, and real operational defensibility. So that combination, all of that is a big part of why we remain so bullish on this sector, and why we're excited to be working with more of a network to fulfill, the opportunities that we believe some of our investments may have. Excited to be here. My name is Lauren Abda. I'm the co-founder of Branch Venture Group. We are an angel investment network and syndicate investing in the best and the brightest founders building the future of our food system.
Amazing. Well, I'm so excited about this conversation. You've been in the space. You're not a tourist. You've been in the space already for a few different periods, and we're really excited to learn from you.
Excellent. Well, you're being very kind. I think it's been over a decade at this point, Alex, but I'll take the more general reference that makes me feel younger.
Well, it's a pleasure to have you. First of all, what is the check size? Just of typically you guys looking to deploy into companies at what stage?
Yeah. So at Branch Venture Group, companies that are coming to us are typically at their pre-seed or seed stage financing round. They're often looking for, angel investors to really join and contribute. In some cases, they may be smaller checks or larger checks, but effectively they're looking for people to commit time and bring additional value to their business. So for individual angel investors in our network, we commonly see checks ranging from about 10,000 to 25,000,
Mhm.
sometimes 50,000. Although many members have invested significantly beyond that, depending on their, conviction in the opportunity. But because we operate as a syndicate, investors have flexibility. So some want broad exposure across multiple investment opportunities, while others may lean in heavily and commit more of the capital that they want to commit to angel investing to one or just two founders. And on the company side, our rounds are often very collaborative. We syndicate opportunities alongside other angel groups, family offices, strategic investors, venture funds, and are very actively engaged with the network of sometimes later stage investors in this space.
Amazing. And is there a certain ownership percentage that you guys usually like to come in at? Oh, is there a minimum? So the valuation still needs to be there. If it's a pre-seed, like it's a pre 2 million, a post a 4. Is that typically where things land from the valuation side?
Um, No two companies are the same. We have made 29 unique investments here at Branch Venture Group. But for the most part, the companies that we're looking at, they're typically raising on a safe or a convertible note. In some cases, there's a valuation cap. In some cases, there's a valuation. Some of them are priced rounds, which absolutely do have a valuation. So it's all different, I will say. But in the interest of our dollars and the early stage kind of angel checks that our members are writing, in most cases, we're looking at opportunities that are sub, $10 million in valuation. And again, as I said, really looking to create a lot of value over the course of this financing round that we're a part of to go out with a much larger and substantial valuation at their next round of financing.
Amazing. And what is a typical LP that comes into your syndicate? And why are they choosing to go into a syndicate, say, rather than maybe joining, a fund or another vehicle? Why specifically this syndicate? What's the profile of the LP?
Yeah. So maybe to add a bit more context. So we started Branch Venture Group in 2017 after launching Branch Food. In 2015. It's a company that I launched. It's a Boston based innovation platform and really community focused on supporting the future of food across entrepreneurship, investment, and industry collaborations. And that reach extends, far and beyond New England through Branch Food and the network that we've built. And so we've worked with thousands of corporations, founders, investors, researchers, partners, really across the global food ecosystem. And so when we started investing 2 years after forming Branch Food and developing Branch Venture Group, this community platform, it sort of evolved. And food and ag investing was not really widely understood as, a really attractive, I think, venture category. So many institutional LPs viewed this space as complicated, fragmented, or really just too operationally intensive,
Yeah.
rather than spending years trying to convince LPs that we were, the team to be able to develop the fund. And before we had a track record, we actually decided to just build proof first. And so we decided on a syndicate structure that allowed us to activate all of that whole network, experienced operators, executives, other angels that we knew and we were working with, who already understood the industry and already really saw the change that was taking place and happening, and wanted direct exposure to the innovation that was coming to market. And so the syndicate structure really allowed us the flexibility to work with this network and involve that network in the value creation that we were ultimately extending to founders. Our members could invest selectively in, a lot of the companies they believed in. And from a founder's perspective, they could gain access not just to capital, but to a network of strategic partners and operators, customers, and people that, as I said, could really add value to their businesses. So over time, that model has really validated itself.
Yeah.
So since 2017, we've invested in 29 companies. That portfolio now has 2 unicorns, many markups, nearly half of our portfolio is cash flow break even. We've had
No.
liquidity events, and we continue to see really strong performance from businesses that, again, combine that visionary innovation and innovative opportunity with really operational discipline. And so at the end of the day, mostly what we've proven is that food and ag can generate really strong venture outcomes when founders are paired with capital and strategic value add.
Okay, so we're gonna double click on this one, and I think a lot of our listeners, clearly we're bullish on the space, right? Otherwise, we have to be optimists. We have to be realistic about it, but also we can't deny that we're going through, the winter season, right? There's many seasons that we can go through, but
Mhm.
it's the way you're describing it sounds like the performance actually of the syndicate is quite strong. Like, what are the things? What were the guiding principles that guided those investments that have led to actually VC style returns when I think a lot of, let's say, bigger funds, right? The well known bigger funds that raised, in that 2020, 2019, 2021, right? They're struggling with their portfolios. So why has your syndicate model actually been maybe more effective than a fund model?
Mhm. Well, and I think it gets back to, sort of again why we're still really bullish on this sector. I mean, at the simplest level, people still need to eat, despite the fact that, so many other forces have come in to attract capital and change how people are thinking about the industry. I think in many cases, food is one of the few industries every human on the planet engages with
Yeah.
every single day. And it's a system that's changing for reasons completely beyond its control. I mean, climate changes are happening, consumer trends are influencing the industry, supply chains, cost of inputs, things like GLP-1 drugs. Yet sector remains dramatically undercapitalized relative to its performance and scale. And I think there have been some big bets people have taken on this in this space. Unfortunately, some of them have not worked out. We've seen the news headlines on them, but that doesn't mean good stuff isn't still happening. And it's taking more time, I think, to have those big announcements and those big liquidity opportunities. But they're underway. We've just heard about a lot of the things that have failed. And I think, while capital today is still overwhelmingly concentrated around AI, software, infrastructure, food represents something fundamentally different. It's a real economy industry with durable demand and enormous opportunities for innovation. And interestingly, I think even the AI boom itself is creating opportunities for food infrastructure. I just read that Aramark recently launched a dedicated business line to support AI data center construction and workforce operations, which is a great example of how every major technological shift still depends on the physical world systems like food, like logistics, like labor, like hospitality infrastructure. And I think traditional venture investors sometimes forget that. And unfortunately, I also think limited partners that are thinking about what venture funds to invest in also forget that. And so I think that there are very strong acquisition dynamics in this sector as well. If you look at, the top 25 US food and beverage corporations, you think these are companies like Campbell Soup, General Mills, PepsiCo. They've averaged roughly one acquisition per year over the last 25 years. And that creates a highly active environment where we're seeing many acquisitions. It's an incredibly acquisitive space. And that doesn't even account for all of the private equity firms that are coming in to acquire businesses, do roll ups, and ultimately sell those companies to potentially larger corporate strategics. But what excites me is that, the opportunity today extends far beyond consumer brands. And I think as consumers increasingly put demands on our food system to create, healthier, better for you products, cleaner label, fresher food, more transparency, more sustainable packaging, like all that has a ripple effect in what the supply chain has to deliver to those end consumers. And so that changes how food is manufactured. That changes what types of ingredients we use in our food. That changes what types of advanced materials can replace different types of plastics that have direct contact with our food. That changes agricultural inputs. That changes a lot of things about the industry, necessitates change in the industry. And so I think many of these businesses that we're now seeing come to market that are more tech oriented in food tech and ag tech are creating this critical infrastructure that we need to fulfill those downstream consumer trends. And, I think in many ways in a world increasingly driven by, digital speculation, food investing offers something rare, which is essential demand, tangible assets, strong pipeline, and real operational defensibility. So that combination, all of that is a big part of why we remain so bullish on this sector, and why we're excited to be working with more of a network to fulfill, the opportunities that we believe some of our investments may have.
So, absolutely. So, thank you so much for setting up the thesis as well here, and it's definitely that reminds me of a certain cartoon in The Onion, where there was a doctor crying, and the headline was morbidity is still projected 100%, meaning still everybody eventually dies. So I said, everybody usually eats 3 meals a day, right? So there's some dollars that have to go towards something, right? And that's a realistic demand. It's not like a meme coin or some sort of ape that's an NFT. So there's something real here. But that being said, how does that influence, say, the last two investments you guys made? Because you deployed relatively recently. I think it was a February, there was a March deployment. Can you maybe talk through, hey, this were two bets we made. This is the reason why we're bullish in those spaces. I think one of them was, I believe, in cell culture, it actually meet.
Mhm.
But
Mhm.
you talk through why you're bullish in these spaces, which is kind of contrarian.
Yeah. So I think you're referring to two of our companies, Mothership Materials and Ada Membre. And I think those are our two most recent investments. I think what connects both companies is that they're solving foundational infrastructure problems within the food system, in different parts of the food system, but in the food system nonetheless. And so Mothership Materials is taking basically a food processing waste stream and converting those waste streams into high value carbon negative feedstocks, which can be used in biomanufacturing or other parts of the food industry. And that's a compelling business because it simultaneously addresses waste reduction, supply chain efficiencies or inefficiencies, material innovation and material product development, and sustainability. I mean, it really is a remarkable innovation and a target market that they're really going after. And so we're very interested in businesses that can unlock value from those existing inefficiencies in our food supply chain, waste being a major one of them. And these sort of circular economy models, because they become especially powerful when, the sustainability benefit and economic incentive are really aligned. And then I think with Ada Membre, this is, addressing one of the biggest bottlenecks in cell cultivated protein manufacturing, which is scalable texture and structure through edible hollow fiber scaffolds. So really interesting kind of part of cultivated protein development, how we really scale it up, which has been a constraint for the industry in terms of its growth. And I think a lot of the protein conversation has historically focused on the biology. How do we design this innovation to scale? But manufacturing scalability is, where many of the hardest problems remain. And so we saw Ada Membre as a enabling infrastructure for the future of food protein. We're still big believers in this space, despite the fact that it's had its challenges in getting, market adoption and certainly consumer acceptance, though it's nowhere near being able to be accepted by consumers by way of brands, I think, today. But I think in both cases with Ada Membre and with Mothership Materials, both had incredibly strong technical differentiation, incredibly strong founders. These are large emerging markets, will continue to be large emerging markets, even though they may be behind here in the US. There are other parts of the world that are certainly adopting these technologies and these markets are growing by leaps and bounds. I think to infrastructure level importance, there are clear inefficiencies that these technologies can be plugged into and help change. And I think the ability to create long term strategic value within the food ecosystem is something that both of them are doing.
Mm. Okay, so what I'm hearing is that you're essentially taking a step change in the tech. It's supporting existing into industry. There is upcycling side streams, so potentially, you could, probably the model would be also partnering with a corporate that has a side stream, uncovering capex. Potentially, that's most likely the way that things are looking like. They're evolving. Would that be correct as well?
Yeah, I mean, for example, you think about all of these foods that are produced or plants that are converted into foods that are consumed. We don't eat the whole plant. When we consume grape juice, for instance, we crush the grapes for the juice, but what happens to those skins? What happens to that,
Yep.
the grape flesh? What happens to those seeds? That has value. And I think until now, these technologies haven't been developed to be able to extract that value. And also, once the value is extracted, what are really the markets that we can
Yeah.
then feed that value into to provide a more sustainable, outcome for the waste that's been generated.
So if you take the journey of these two companies through your DD process,
Mhm.
what was the process like? How long did it take? How is a deal put forward before Syndicate? Like, can you peel back the curtain, like show us how like the wizard actually looks?
Sure. So we've had now the benefit of running this process and refining this process now for almost 10 years. And for us, we're very committed to making it a professional, efficient, and founder friendly process. I mean, ultimately, we're trying to build relationships here with the people that we're investing in. And so off the bat, we want to be perceived and
I speak with founders raising every day, and they're all telling me the same thing. It's harder than ever to find investors who are actually deploying, and getting access to those leads takes time founders just don't have. Every month fundraising is a month burning runway. This is why we created FTW Plus, a community of founders actively fundraising, the world's most accurate agri-food tech investor database, plus connecting you directly to ideal target investors and a community of support and accountability. Guaranteed results or your money back. Apply today at www.joinftw.com/hub.
as good investors that can add a lot of value. And so, even if we don't invest, which we often do not, because as I said, we've been doing this for a long time and have made 29 investments that we've looked at thousands of companies. We want entrepreneurs to walk away feeling respected and like we added value and gave them something to think about because at the end of the day, we're looking at a lot of companies that overlap in terms of their objectives and what they're doing. And sometimes, give the founder something more to think about as they think about their business and the opportunity looking to the future. So the process for us typically starts with introductions on behalf of our network and our community. We get nearly 90% of our deal flow is inbound. And we also manage a Gust platform. So we have an application process on Gust where all companies go. And that's really what gets their information into our system. And so the first thing we're evaluating is really the initial fit, whether the company aligns with our investment criteria, which is everything from the team quality to the market opportunity to the scalability of the technology or the product, the strategic fit with food and agriculture. We think about timing, market timing for sure. So if it appears aligned, the company moves into our screening process. And our team reviews submissions and determines whether the company should present to our membership as an angel investment group. We welcome companies to present to our angels on a monthly cadence. And if they don't, sometimes we provide feedback, other times we don't. I wish we had the time to be able to give feedback to all of the businesses that come our way, but it's just not how we're structured. And we certainly don't have the team capacity to do that for every company. Once we select the companies we'd like to move forward with, those companies present to our members. They typically get 12 minutes to do it, followed by 8 minutes of questions with our membership. And then we move on to the next opportunity, but really trying to evaluate what our members are most interested in, because that's ultimately, we're doing the work in support of their deal evaluation. And then if there is enough member interest, we will do diligence on a company. And so our diligence is
How's
robust.
the member interest gauged?
We have forms that members fill out. So
Okay.
as part of that process where a company presents, we do the Q&A, we then ask our members to fill out a form which indicates their level of interest in the deal and in the opportunity. And if there's enough interest, we will move forward with a formal diligence process. And that for us is everything from customer references to management references. We build our own market analysis, our own competitive analysis. We do team background checks, evaluating the financial model, projections that they have. So it's pretty robust. And then, if the diligence is positive, we've moved, we produce an investment memo, which is a summation of all of the research that we've done. That memo gets shared with all of our investors that may have expressed interest in the deal or are just part of our investment syndicate, and they self-select how much they'd like to contribute to the funding round. We then review term sheets, legal documentations, and really kind of then syndicate the opportunity. So the entire process takes about 2 to 4 months from first interaction really to close, sometimes longer if the round, involves multiple syndicate partners and some of our members have their own added diligence that they'd like to go through. But what's unique about our model is that the relationship, really doesn't stop after the investment. And I think for us, our in getting to know the company so well through that extensive diligence process, we are all the more able and understand how we can really help support this company once they get the resources that they have. And then once they have that funding, they're able to achieve more in an accelerated way because of the network that we can plug them into, helping with everything from hiring to partnerships to strategic partners to connecting with customers, manufacturers, offering insights on strategic growth. So we really try to supercharge the portfolio companies that we have with our network.
So double click on a few of those steps because they're really interesting. What are the signals you're looking for? Like, so, hey, I go on the website or whatever, I do my application. Like, how do I get through to the next stage? Like, are there certain markers of, like, let's assume that you're not talking about building a data center, okay? You're an AgriFood, okay? All right, great, excellent, okay? What are other signals are you looking at and say, okay, well, that's a bucket that's worth looking at a little deeper?
Yeah. I think we're looking for signals when it comes to the quality of the team. What about their unique backgrounds lends well to them starting this business? We're looking for some level of market validation, whether that be, hey, we have a pilot with this really interesting food corporation, or we have an advisor that works with this corporation and we, expect more work to be done with that specific business. I think when we're thinking about economic model and the financial model for some of these companies too, it's often the case that there's some sort of like industry arbitrage or economic arbitrage happening, right? Like one of the companies in our portfolio had some really interesting repayment terms with their manufacturer, where when they received the product, they actually didn't need to repay that manufacturer for 90 days. So the amount of investment they were able to make in the marketing of the product and their go to market, it really allowed them to be able to invest in that heavily because of the repayment terms they had with their manufacturer. And so it's unique kind of opportunities like that, and unique relationships like that many of the companies we've invested in have developed with the other partners that they have, and that's given them some unique advantage that allows them to get to market faster, invest in their business more, and really demonstrate the traction and the opportunity here. So we look for
This
signals
kind
like
of like
that.
unfair. It's like it was a specific unfair advantage that they have that others won't. Which is like payment terms are really fascinating. With it's a great example. It's like basically an interest-free loan that people provide to you. It's like, oh wow, interesting. It's just an extended credit card. Maybe you don't get the points, but yeah, it's pretty exciting, right? To have that as a competitive advantage.
Yeah.
Any other signals that would kind of take you to the next stage?
I think we're always interested in unique stories and drivers also behind these companies. I mean, we meet a lot of people that who have worked in food, been in the industry, sort of see an opportunity for bringing a new product to market. For us, that's fine, and they may see a really unique opportunity and have a really unique product that they believe exists. But I think for us, we're looking for a little bit of a deeper meaning, a deeper mission, a deeper vision, because you and I both know these businesses are really, really hard. This is not a get rich quick space. You really have to have an underlying driver and something that is really, has bound you to this opportunity in such a way that helps you see, through some of these really challenging times of building companies. And so um that is something I think that comes out in our diligence process. It's not something we specifically always ask about, but in, I suppose, the conversations we have with management references, we're really looking to understand what motivates an entrepreneur. Are they coachable? Are they interested? Are they curious? Are they really, why are they trying to figure out this problem? Or what does success really mean to them? And getting to know the person as much as you get to know the opportunity, I think is critical to working with that person effectively to ultimately see these opportunities through to success.
A- And when the individual pitches to your LPs, what's in that form? Is it just like 1 to 10? How different categories? 1 to 10 founding team, 1 to 10 commercial traction, 1 to 10. Is that what the form looks like, or it's a little different?
Actually, it's a little different. We are not looking for our members to necessarily evaluate the opportunity at, the time with which the company is pitching. We're simply just looking to know if they have interest in moving forward, because ultimately the diligence will reveal the details around all of those other areas. We're just looking for a positive indicator that we should continue looking at this deal because our membership is interested. And that's an important, part of it for us, because we don't want to be doing diligence on companies that our members aren't interested in, because at the end we may go through all this, this whole process, and then we don't have any angels that want to invest. And so
Yeah.
we try to stay very close to what we know our members to be interested in and really focus on those deals. That is imperative to not wasting our time, not wasting their time, and most importantly, and we never try to waste entrepreneurs' time.
So, last couple of questions. What is the typical LP? Who is he? Obviously, it's an accredited investor, right? So they have
First,
over $1 million, or he or she. Thank you. It's is it obviously have over $1 million in net worth, right? So that's
yeah.
kind of given. But is there a common path you see of who's attracted to take a position here? Are they all in the industry? Are they
Mhm.
driven by an ethical, moral? Are they driven by, hey, this is a technology that I may want to bring into my corporate? Like, what is the analysis of who your LPs are, and kind of what's the common theme?
Yeah. Well, it's always interesting to see who reaches out to us to express interest in being part of the syndicate, right? Because at the end of the day, I think they see value in, first and foremost, the investment return potential, because that is, one of the primary drivers of why people get involved in angel investment networks. They're looking for a way to get a return on their capital and leverage their own knowledge and expertise to help build a business that ultimately, can get them that return. But increasingly, we are seeing even more investors, investing by way of wanting to have some sort of impact on the world. So whether that be, I really believe in this particular cause, I'm really interested in sustainability, I'm really interested in contributing to human health, and I see people out there that are building these businesses and I want to support them
Mm.
too. So it's a little bit of both. We hold our members to a high standard as well. We want people in our group and have had to say no to some people who we didn't feel like were part of the group for the right reasons. This is not necessarily just a social club. This is not, just a way to kind of kick around deals all day. We built our reputation on doing deals and funding companies and finding the best companies that are out there. And so that is our North Star, and that's our primary objective. And so evaluating opportunities and angels and investors that, share that is a big part of how we think about crafting our own community here.
I love that. Kind of last question I'm starting to ask, because this come up in my own personal life and in my role. How how do you deal with like the fear of rejection when asking for money from LPs? Right? How do you personally, like, what does that feel like for you? Like, it's like, I just recently spoke to an entrepreneur, and he's in his mid 40s, late 40s, whatever it is, and he's just looking to raise $500,000, and he's been in the industry for a long time. And I said to him, like, $500,000, that should be enough, just be 4 phone calls for you and your network. Like, that shouldn't be hard. It's like, yeah, I just don't feel like I'm comfortable asking family or friends. Oh, interesting. So you're not comfortable asking people who know you best for cash, but you are comfortable asking total strangers. So like, what does that mean for you? So how do you manage that natural discomfort around, you know, taking people's money, investing it for them?
Mhm.
Any tips that people can get from you by your mentality towards it?
Yeah, I think, at your core and at my core, I feel like I've developed, really real conviction in where and what we're building and the long-term opportunity specifically within, food and agriculture innovation. And I think when you spend years, working closely with founders and seeing the real outcomes emerge, that conviction really becomes grounded in evidence, not just optimism. And sometimes I think for, perhaps in this case, this founder, um, it, do they have the deep belief that they will do this, can do this? And personally, I've always been a tenacious, persevering person. I remember taking a tennis lesson when I was, in grade school, and my coach at the time told me that I was tenacious, and I had no idea what that word meant. But I remember going home and looking in the dictionary, and I was like, "Yeah, that's me. Like, I'm committed. I'm determined. I will do it." And and I think for us at Branch, we've already demonstrated success through the performance and the caliber of companies that we've backed. So if someone doesn't yet see the opportunity for us or, for them, selves, I don't take it personally. I think ultimately venture investing, inherently requires seeing value before consensus forms around it.
Yeah.
That's kind of our job. And I also think operating in, an underappreciated sector builds a lot of resilience. You learn pretty quickly that meaningful innovation often looks unconventional before it becomes obvious. And so we are in the business ultimately of risk mitigation. We have done everything we can around the companies that we work with to de-risk those opportunities. And that is essential in this industry when you're committing capital. And so I think again that's a big part of why the network is so valuable for these opportunities that we invest in and that we work with, because ultimately the value that those people bring and that network brings really helps to de-risk.
Yeah, beautifully said. How can our community give back to you? You've shared a lot of wisdom with us. We learned tremendous from you. How can we give back to you?
Well, thank you, and we certainly can use support ourselves as well. So we're always looking to connect with exceptional founders building in food and ag. So please reach out. Strategic corporate partners, they're a big part of our ecosystem and who we keep in touch with to understand what innovations they're looking for, so we can make valuable connections. Um, Other investors, whether they're angel investors, family offices, people that are looking to invest through their donor advised funds, fund of funds. There are many different forms of capital out there that I think food and agriculture are uniquely positioned to be able to receive. And so we're interested to speak with all of those people. But, I think more broadly, we want people to start viewing, food innovation as not just a niche category, but as one of the most important and investable transformations happening in our industry that they could get an impact return from, and also can create a lot of impact with the dollars that they have. I mean, you know, sometimes we hear, well, food is too niche, but there's absolutely nothing niche about a $10 trillion global industry. There's nothing niche about every single person on this planet needing to eat multiple times a day. And so, the food system touches everything from health to climate to sustainability to labor to manufacturing to the economy. I mean, it's so much and it's so present and it's not going anywhere because of AI. And so I think, some of the best opportunities are still being overlooked. But join us at Branch Venture Group and maybe you'll find them.
Thank you so much. Really enjoyed learning from you.
Excellent. Thank you for having me, Alex.
One more thing, don't close this episode yet. If you got value from this conversation, here's what I need from you. A 5-star rating, one comment, 20 seconds of your time. That's the deal. A 5-star rating means more founders find this content, and every time a founder raises, all boats are elevated. Every week, I pick one random comment and send that person a complimentary copy of Investment Climate, the book. 50 sales playbooks from founders who actually raise money during the fundraising winter. Real strategies, real closes, real numbers, not theory. So if you want a copy, comment below. And if you haven't followed the show yet, do that too. And if there's a guest you want us to bring on the show, just drop us a note or send us an email. We'll read each and every one. Until then, keep on raising.